Live from Europe's financial capitals, this is Squawk Box.
Good morning, everybody. I'm Jeff Cutmore. Welcome to Squawk Box. It's Spain's turn to face the debt test. Finance Minister Elena Salgado tells CNBC in an exclusive interview she is confident that the auction will be a success and that her country does not need a bailout.
We have to improve our economic governance, so we have to work together. But if you are talking about something like as a bailout, definitely not.
And I'm Patricia Sarvis. The ECB will be closely watched for any details on its market intervention as President Trichet prepares to justify the central bank's bond buying program.
I'm Becky Meehan. Asian equity markets trend higher, but South Korea underperforms as the country's central bank delivers a surprise rate hike. That follows the president's calls for a war on inflation.
And my Sita Raman, a very real threat of rising food prices. A US government report warns that stockpiles of corn and soybean will be reduced to uncomfortably low levels this year.
So let's get on to this sovereign debt crisis story. European banks may be picking up the bill for the region's crisis fund as the European Commission considers a one-off €50 billion tax on financials. In a document seen by the Reuters news agency, the EU executive is proposing that ministers back a plan for a one-off tax of 0.2% on euro area bank assets that would contribute to the European stability mechanism. Meanwhile, Germany has unexpectedly thrown its weight behind proposals to give new powers and extend the lending capacity of the European Rescue Fund. The Financial Times, which cites unnamed sources, says German Finance Minister Wolfgang Schäuble does not expect an agreement at next week's ECOFIN meeting in Brussels. Schäuble is said to see a deal being reached in February or possibly even March. Investors focusing today on the Spanish auction. The country holds its first bond sale of the year in these jittery debt markets. Let's get out to Stefan to talk about the government's view of how this auction will go. Stefan.
Good morning, Jeff. Of course, it's a very important option today for the government because it's the first one of the year, and we are expecting Spain to pay a significant premium if you compare to the previous auction that took place for the 5-year paper in November last year. We're expecting the country to pay 130 basis points more than the yield it paid in November. At the time, it was 3.57%. That being said, the situation might not be as dramatic as we could have feared earlier this week because the spreads with Germany have been tightening over the last 24 hours. And of course, yesterday in Madrid, the market reaction was very positive to the Portuguese bond auction. Therefore, the government is confident for today. I met with the Spanish finance minister, Elena Salgado. She's confident about the bond auction today, but I also have asked her whether or not Spain would need some financial support from the Eurozone.
Not at all. If you are talking about financial assistance, for sure not. But of course, any of the countries of the euro area, we need all the others because we have to improve our economic governance, so we have to work together. But if you are talking about something like as a bailout, definitely not.
How do you expect the bond auction to go this Thursday?
Yes, of course. We are very confident. We have been confident all time because all time demand has been big, and the problem has been in some cases the price that we had to pay.
Will this bond auction be underwritten by the ECB, the European Central Bank?
No. Well, as you know, we normally do not know because the European Central Bank, they say how many bonds they are going to help, but not the countries of origin. But we think that we are capable to do by our means.
Do you think that Eurobonds would be a good idea, would be a solution? And how do you explain the German opposition to these Eurobonds?
Well, the question is that even if it could be a solution, it's not an immediate solution. And the crisis that we are suffering in the bond market and the stability that we are suffering in the bond market is the stability of this month, on last month, on next weeks. So the Eurobonds idea, even if it could be a good idea, is not something very useful for now.
And the situation in Spain is not only about public deficit, there is also a big concern about the banking sector and precisely about the local savings banks. We'll have more of this interview with Elena Salgado in 20 minutes time at 7:30 Central European time to talk about the banking sector. So stay tuned, we'll be back a bit later, Jeff.
Okay, Stefan, thank you very much indeed for that.